All right, good afternoon, guys. Ken at Tortoise Capital with a closure report and portfolio speed run on a quiet day at the end of our second leg up. It is April 22nd, 2020. An extraordinarily quiet day. So, this is where we were yesterday. We had made the first penetration of the dragon with price and closed poorly. The market, and that was on the big trigger that day yesterday was the oil implosion, but had a solid gap up, sideways trading mostly, and then closed with slightly higher, and it's right on the projection line of the dragon, that 10 period simple moving average projected forward based on the slope of the dragon. And the 30 period regression line slope here projected out this way, so we can get a sense of those two. I kind of like those as reference points, and we'll continue to maintain those. So first things first, we're going to move our prices over 1 day, our look back periods. This is now the 30-day high. And it's also the 10-day high, so those are both anchored. That's good. The 20 period, move over, and then the 10-day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Good. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All good. So here's our 10-day look back. 10-day high, and now the 10-day low is here. Still anchored. The 10-day low. 30-day low is still anchored here. This is the peak sell-off. Belly of the 10, belly of the dragon. This one is that's anchored at that belly of that 10. PSAR has now moved up, so we can get rid of that one. Let's put this down here at Z minus 2. We need one here at the Bollinger Band mean and the RL30. Interesting, the river has flattened out and is starting to curl up. One more day and that will start to curl up, and it will have crossed over the 90 SMA. They've been paralleling each other the whole way, and now the river getting ready to turn. Dragon has already turned, the 90 has turned, or the 30 has turned. 1 day range is tight in here. Going to move our 1 day low stop up to here. Just for now, I like that 2 day low on this little pullback, because that actually feels like support. And tomorrow, that's going to be the 10-day low. So I'm going to actually front run that a little bit and make it more significant. And say today the previous 10-day low held. So we're going to, the significance of that is going to diminish a little bit. This is the 20% sell-off, 30 and 40. And you can see we're right about 19% sell-off. On the upside, we have fair value, Z2. This is still solid. The hump of the RL10, the 10-day high, the 30-day high, that's it, and still looking at Monday's open. Bring this down to Z3. And we have to look a lot higher before we get to the hump of the dragon, hump of the 10, and then the Z3 maximum excursion. We're just going to get that out of the way. The Z3 max excursion prior to the increase of volatility was here. And this one is sort of the peak Z3 extension, and anything north of that is just absolutely the land of milk and honey above 400. It may be a while before we get there. That's irony. Okay, so those are our two glide paths. And this is the turning point, is the short-term momentum has till about here to get steeper and to become in alignment with the projection of the PSAR. We're going to go pick up the Z-2. We are still in the summer. Today's favorable price action maintained that maintained the summer rating because it was getting close to get flattened into fall, but today's improvement on the price action was not insignificant. But I showed in another chart. Intraday, this is what it felt like. You know, we've had, you can see clearly here now, leg 1, leg 2, and it has terminated. It's gone from P1, which is at RLCO outside the river, well outside the river, to an RLCO outside the river. It's like it opens and then pinches shut. Here was the first pinch, and then it expanded, and then the second pinch. So trading from P1 to P1 is possible. That's that opportunity space in there between the fast and the slow moving regression line. And it terminated in the quietest of days and almost in a perfect doji. And so the first tentative opportunity to the upside is going to come to be this test of the RL10. And that second stage will be back to that long-term fair value, the RL270. And then the third chunk of really outrageous good fortune would be back here to the PSAR flip and the hump of the dragon. So almost 3 regions of tactical, operational, and strategic gains, and how the psychology would improve. To the downside, I think it's tentative weakness, tactical weakness down to the PSAR flip. And then it becomes intermediate pain and suffering here all the way down to the belly of the 10, which is strong support. And then from there below, it's just pain and suffering as far as the eye can see. So what we have is all of this maddening pain, 2 legs up that have paused and refreshed, and actually was a slight vote up today. Failure to fail further, slight improvement, stayed inside the dragon range. This is really the start of the third leg, and those are the 3 extensions in tactical, then operational, and then strategic level objectives. You know, target 1, target 2, target 3. You can think of it that way. Perfectly poised, and we've gone from winter into the spring. Pretty good. Through the Red River when life was tough, and then here into the summer, and it's held and postured for a nice recovery. I mean, if it moves out from here, let's just suppose that the size of the next leg is the size of the previous 2 legs. This would take us from 258 to 270. It says $20. So this would take us to 300 if it takes off from here, and that would get us up to here. Back to fair value would be the third leg. And long-term fair value, which has now come down from about peak of 320 down to 300. 8% sell-off, 8% reduction in the long-term estimate of value by the power players. Okay. Meanwhile, let's come over and look at the story of the day. S&P up 2%. What was better? Well, I'm sorry. This was early afternoon that I took a look, and what I was noticing was what was better at that time, about deciding where to play the afternoon trade. XLE and Cisco, Brazil Tech Clean Energy, Devon, McDonald's, and Wheaton, and then UDow. So I stayed in those top 4 in the afternoon. What was in this tight cluster that was close but slightly behind? The Dow Materials, Healthcare, Home Depot Cut. This middle tier of Virgin Galactic, Walmart, EFA, Real Estate, Russell 2000 Finance, Steel, Mexico, getting smashed, Cat, Wind, Treasuries, U.S. Steel, Simon Property Group. And then in that great oscillation, up 50% yesterday, SCO, now down almost 20% today at this moment. Now when we shift back to look at the let's look at how it closed. Still pretty much the same thing. That energy still came through. So Devon, Alcoa, Tesla had a nice rebound. UDow finished strong. Wheaton. So the early afternoon call of McDonald's, Wheaton, and Devon led us into some gains. Alcoa with a real strong finish at 7%. Where was that earlier in the afternoon? It was down at 1.91%. So it was basically where the market was. So it turned in another 6% upward move. So when you see that tonight, you won't be surprised at that move. Yeah, the other usual suspects still did well. Energy, Tech, Brazil. Diamonds were pretty close. Materials all pretty close, along with Japan, Euro-Asia, Walmart, Healthcare. Still getting smashed. Oil, this is the anomaly. Oil down 9%, and the triple inverse oil down 15%. It has to do with the construction of the instrument and buyers and sellers horsing around with their leverage. That's one of the many reasons I don't like to swing trade that one. That whole energy sector just feels odd to me. U.S. Steel not hanging with the rest of the market, and so we got to watch that one closely for failures, especially when we compare it to Nucor Steel. So U.S. Steel down 2.8, Nucor Steel up 1.2, so a 4% swing. At a time though when basic materials were much better and Alcoa was great. So that's real pain and suffering there on U.S. Steel. There's some structural problems in the company. That's more than just the sector. All right, let's see if we can get the speed run cooperating today. Stalking, I like the upward price action through the dragon. I could be tempted, I think, there, and I think I'd have the stop right there. I think I'll set those as alerts, and I would start it with an intraday. All of these swing trades that I'm going to talk about, where I'm talking about possibly entering tomorrow, all of these would start off with an alert, an intraday turbo, and then keeping a piece for the swing. Apple looks interesting to me. That 4-day sell-off bottomed, had a nice gap up and closed strong. I think we should be ready for Apple. I think that's the breakout right there. Aussie dollar, we are short one. From here, and our stop is still up here at the PSAR flip. This is where I'll add a second and a third and a fourth. Boeing, we scratched a couple days ago. It's just mucking around sideways. It's really at a critical state. What's it going to do? I think we should set up an alert box in here like this to see which way that's going to go. If it breaks out above the dragon, that's good. That would be great. This would be superb. This is more likely. This would be collapse. all the way back to here. Let's see there. Caterpillar, just stalking it. We scratched the swing before. Just don't know which way to go on that. It didn't follow through very well today on an up day. Cliff, we got out of that one yesterday. It's setting up for more weakness. So I think we got to be ready for more weakness down here to the downside. If we see XLB and U.S. Steel going bad, then this is a nice way to get short, I think. This is what I'm talking about. I think I would want to be short if it goes through here. Yeah. Cisco, we had too long and lost money, but it held fine. Let's give it another day of alerting. Set those as alerts. Cautiously optimistic there. Timber, we're still short one with a wide stop. I have a long-term bias to the downside on this one. This is Chevron. We're still long one. We've been white knuckling it the whole time. Let's just keep that stop there. Diamonds. So this one we're just using for strategy, and this is that sideways of the last 10 days. The midpoint violated, came back across it. So still perfectly poised for a move in either direction. No directional bias on it. Took the breakout in Devon Energy today, long here, with a stop there, looking for upside. Emerging markets. We got out of this one yesterday. Had an unbelievable tight doji today. Waiting on the U.S. to see what's going to go on. That's going to be a nice hybrid frog. Emerging markets. We're short one with a stop above the hump of the RL10. Japan. We scratched at neutral yesterday. Nice tight doji, waiting for direction. We're short one in Mexico. Didn't close well today. Wide stop. See how that one goes. Brazil, short one. I've got an alert to get out half of my position at the edge of the dragon, but I'll keep this one here for the rest of it. Red lines where I'll add. Gilead, we're short one. It reversed, and so we scratched that one today. Too easy for that to get momentum, and it's not one of my usual suspects, so I want to reduce my cognitive load. Moved our stop in Home Depot up to here. This still feels good. I want to add a second position if it breaks to a new high. Okay. Russell still long from here. The PSAR is holding. Let's keep the PSAR as our stop. Real estate, we're short two. This is where I will add a third. Wide stop. McDonald's, got long one today with a stop at the PSAR. We'll use the PSAR all the way up. Nucor, just as a point of reference to compare this to U.S. Steel. This is in better shape than U.S. Steel. Just stalking. Clean Energy, stalking, still sideways. SCO. Yesterday we played that unbelievable 70% move through here, and today it was also, you'll just notice, wildly volatile. So it's a great intraday play. I can't see it as a swing. The stops are just so wide, your position size has got to be small. Silver, stalking, feels good. Virgin Galactic, we're short 3. And we were short 2. This is where I was going to add a third one, and I decided to scratch the second position and just make bank on this one. I wanted to raise some cash. Simon Property Group, we are short one today from here. And let's stop here. Now we had been short 3 and covered, nice. And then this one started to roll over right away as the dragon's already rolled over. So got short with a wide stop. This is where I'll add 2, 3, and 4. We've already talked about volatility and the broad market treasuries. I covered the 2 long positions here, and so that second one scratches, the first one gets paid. But it did have a nice tight range. We'll see. Tesla, I'm going to come back to this one to show a detailed lesson on core and turbo in the strategy podcast tonight. For those of you keeping score at home, actually I want to show you this, the one that's already marked up. Hold on. Snapshot teaser. We're going to show how we combined a short position with a turbo, added a second turbo, sold both turbos in here, carried the short overnight, reinstituted the turbo, so now we're short 1 on a swing and a turbo, covered the swing, so the swing trade was from here to here, paid for with the market's money earned in here. We get a sideways quiet channel and a super pinch, breakout, add a second position turbo on the Z3 excursion, covered in the RLXD, exit in the usual way, and now we are net flat Tesla. Core and turbo. Let's see. Oil. We had been short 2, covered 2 days ago, observed in amazement and traded intraday on these, but I got no swing on this. Can't take it. Wiz, this is just that robotic AI best of breed. It's underperforming the S&P when this should be the time that it's the best, and it's underperforming the S&P. More work for those guys to do. Walmart, we're just stalking after 3 really good swings in a row. On a better day, if the market were not in such a critical state, this would feel like a natural place to re-enter right here. I didn't want the extra exposure. Wheaton, we had 2 long with a stop here. It had a nice gap up, went through Z2, so we added a third position, and I want to move my stop up into my decision stop into something like that. I don't want the third position to go negative. When we're short 1 from here, it's in the money. There's our stop. Let's just lock in the top of the dragon. U.S. Steel stalking. I will get short here. I will get long there. Bracket. Materials. Stalking. Nice tight doji. So that's posture to go either way, and that's going to help drive U.S. Steel. Energy. We got long 1 today with a stop at the PSAR. Financials. We exited our long yesterday, had a nice tight range today, just stalking. Tech, we got out of our longs, but it actually had a pretty nice move today. Tech is back. I think I would be willing to get back in on this with a stop like right there. I think that's what I would do. Healthcare, stalking. We scratched the 2 long positions. Scratched this one and got paid on this one, and then at a really tight. I think I like this breakout, and I think my stop would be there. And I would add a second position if it breaks above this. Okay. And back to Alcoa. Just because, let's just go ahead and put this other So this is 2 days. You see, this yellow area means that we're in the yellow zone, so in the tactical space. So 2 days ago, the VWAP and the price closed right about here, gap down, arced up, sold off hard. So this is a collapsing dragon. I decide to take the short here when it breaks through the Z3. This is going to be a swing and a turbo short. So we're playing an intraday position and a swing position. And then my stop would be here at 0.3, which is the hump of the dragon. And later, that's going to be the, when I decide to hold that swing overnight, that is my decision point for whether or not I would get out at the open. So if it were to gap higher than that, then I would automatically get out at any price. Otherwise, I would hold it and then manage it intraday. And we're going to see that's a swing position that's paid for with the intraday. So we get a turbo position short. We get another collapsing dragon here, so I add a second turbo. So that's 2 scoops short. Rushes all the way down to here, and then I finally get out of both of the turbo positions in here. After it sells off, does not make a new low, and then reverses again. That's where I exit both of these turbo positions. So now I only have a swing trade, and I'm leaving it as a swing trade, paid for with the money that we made on that turbo. It rolls over later in the day, closes poorly. I notice that it closes way down here, but its VWAP was up there. So that was like an exaggerated sell-off. So, I'm worried that maybe the run is done. So when I decide to hold it here, my trigger to immediately get out tomorrow would be if it gapped above this blue line, which was my initial risk. That felt like the collapsing level. Anything above that would negate all of this. But any opening below that blue line feels like the downward trend would still be in place. So it closed here. It gapped up to here. And then quickly started rolling over again. So I notice the peak of the 8, so I get short with a turbo. Now I'm 1 swing and 1 turbo short at 9. My turbo stop is at the peak of the RL10. It falls down. It gets to about where it found all kinds of support yesterday, starts to reverse. This is where I exit the turbo. So the intraday position goes from 9 to 10. It continues to get better, and at this point I'm just feeling like the rest of the market is good, because I'm noticing that the market was strong today, and I don't like that for my swing, so I just cashed the swing trade, which was essentially short here and then covered here. Then today was really an amazingly narrow range, no volatility, no directional leaders. I'm noticing the super pinch now has developed at 12. At 13, I play the breakout from the Z3 pinch. It makes a high, holds support above the VWAP, starts to go up in a couple more legs. It takes out the Z3, so that's what I mean by a Z3 excursion. We add our second intraday turbo position long, and then I want to get out of this thing in the last hour. So now I'm flat in Tesla. Okay, so that's a combination of using the core position swing and then an intraday position, which is usually 5 times bigger than the overnight, simply because of the difference between the intraday spread and the gap of the overnight move. Okay, so that's the quick lesson on Tesla and core and turbo trading. Thanks for your kind attention.